What's good, y'all? What's good, y'all? Big Fish FX. So what I've decided to do today, instead of dropping a video on an actual trade or chart, I want to start getting into trading psychology and start a trading psychology series, because a lot of people, all they do is go from strategy to strategy to strategy, losing and losing and losing, never finding the consistency, and they're not taking into account their actual mental state while they're trading. They don't want to get into the psychological aspect, because once you start getting into the psychological aspect, you have to look into yourself. You have to blame yourself and hold yourself accountable for the decisions that you make when you're trading, while you're trading, right? So, and people don't like holding themselves accountable. You know what I'm saying? So the one thing about the charts, like I tell everyone, like I've told everyone in my group, all my sharks, all the chart does is mirrors your character. It mirrors your traits. It mirrors your habits. That's all it does. It's not doing anything to you. It's not doing anything for you. It's indifferent to however you think. It's indifferent to your emotions. It's indifferent to whatever you got going on. You know what I'm saying? So whatever happened on the chart after you execute things or whatever, that's all on you. That's all on you. You have to hold yourself accountable. Accountability is like number one when it comes to trading. If you can't hold yourself accountable, you shouldn't be trading, right? So now, if we get into trading psychology, we want to understand that the mental aspect of trading, when it comes to your actual mentality, the mental aspect is like 80% of being a successful trader, versus the actual edge or your strategy is like 20%. So 80% is mental, 20% is edge. So what I mean by this is 80% is psychological. 80% of, when it comes to trading, 80% is psychological. You can't run away from that. 80% is how you're thinking, is how your emotions are set up. That's 80% of your trading. Listen to what I'm telling you. It's 80%. So if it's 80% mental and 20% edge or strategy or whatever, then it would make sense to take special care of your mental state when it comes to trading, when it comes to life, period, right? So you can have a good strategy, a good edge. People made money with breakouts. People made money with trend line strategies. People made money with Fibonacci, with harmonics. People made money with Elliott waves. People made money with smart money concepts, institutional order flow. People made money with all this stuff. You can make money with all of this stuff. You know what I'm saying? You can make money with all that, but in order to get consistency with that, your mentality have to be on point. You have to have the actual mental makeup that'll allow you to crystallize that habit of winning and become something greater than what you were or are at the present moment. So when it comes down to it, you have to understand that, jumping from one strategy to another strategy and keep on doing this and getting into the cycle of thinking that it's the strategy that you're lacking and stuff like that, that's only gonna put you in an endless circle of failing. You know what I'm saying? I repeat, jumping from strategy to strategy is only gonna put you it's gonna just have you set in an endless circle of failing. You know what I'm saying? So what that means is, you may have right now a good strategy, but is your psychology, is your discipline, is your setup, your rules that you set up, are those in place to allow your strategy to bring about the results that you're looking for? You feel me? So even if your strategy is like a 60% win rate or whatever, that 60% can still allow you to make money if your mentality is good. If your actual setups, your psychology is set up for you to win. So the first thing I want to talk about when it comes to psychology in this video, I'm going to go over fear of missing out, because this is something that every trader goes through at one point or another. The fear of missing out, right? So before I even get into all of that, you have to understand that we're not gambling, right? So once you start thinking about trading in terms of, oh, I want to make this money now, or, you know, you're not getting your psychology on point. It's just strategy. You're essentially just gambling. You know what I'm saying? You're not taking calculated risk. You're just gambling. So you want to minimize that as much as possible, as much as you can, right? So now, getting the fear of missing out. Just about everyone experienced this. It's the same thing, and this is a deep character trait, not character. I'll say more like a trauma response, or more as in wanting the need to be wanted, the need to be included, the fear of not being included, the fear of missing out on opportunity. You know, all of this stuff is deeply rooted in your actual character. So, for example, when you was a kid, you know what I'm saying, and you probably like high school, middle school, whatever it may be. It's different around different schools. You probably had a whole bunch of group of kids who smoked, right? You probably didn't smoke, and in order for you to be good or accepted into that group, you had to start smoking. You didn't want to smoke because you wanted to smoke, but you started smoking because you wanted to be included in order for you to have that social feedback. So that's also fear of missing out. You don't want to miss out in that actual opportunity to being popular, to being accepted. So what did you do? You did something that you didn't want to do, and it ended up, you know, being something you did that wasn't even your will at the end of the day. You feel me? So so that's one example. Another example is spending. You know, your friend might have Gucci, your friend might have Dior, your friend might have a Lambo, whatever it may be, but your means might not even be to that actual height yet. You know what I'm saying? It might not even be like that. So now you're breaking your back, breaking your pocket, trying to get the money up so you can go get the same thing your friend has, so you can feel accepted in that actual social circle. You know what I'm saying? So that's fear of missing out. And then that'll leave you more in debt, and you're basically robbing your future for a present instant gratification that's not even going to last. So we have to think in terms of delayed gratification and looking for the most efficient setups versus instant gratification and trying to run and chase after setups that's already that already started. You know what I'm saying? If a setup is already running, there's no need to chase it. There's always retracements in the market, and there's always opportunities in the market. So there's really no need to chase anything, right? So if we go down to the charts, an example is right here. If you saw this shoot up for the buy and you didn't want to miss out on this, and then you took the trade here for the buy, where are you going to put your stop loss? So now what you have here is an R&R that's just trash, because you don't even know where your take profit is. You feel me? So let's say your take profit is up here somewhere. You thinking this order block in the gap right there, that's going to come up to that zone, and it never does it. You put your buy in, and it only goes up this short, and it comes down here. Now you can be in crazy drawdown because your position of your entry is trash. The entry it should have been down here, but you missed the entire setup. You getting in here is you trying to force that trade, and you trying to you having the fear that you're gonna miss the entire move. So the emotion kicks in, and you just throw it in there trying to get a piece of the pie. This is what caused people to lose money. So instead of doing that, what you want to do is just wait for retracements. If a move has already started, I think I deleted everything. My bad. So if a move has already started, just wait for it to retrace. You know what I'm saying? Wait for it to retrace. And if you get a nice retracement for it to keep going up, you can get it going up. If you get a retracement for it to go down, you can get it going down, and you're set with a nice setup, and you're set with an early entry, versus trying to chase it at the end of the actual setup. You never buy high, you never sell low, because that's just counter effective. You know what I'm saying? You can't, that's not how you trade. That's not how it's done. So the biggest thing you have to understand is that you're in control of what's going on here. You know what I'm saying? So you don't have to take this trade. Keep your emotions in check. Sit on your hands. You get your best trades by not trading at all, because you'll just be patient enough for the better executed trade. Like this right here, if you would have missed this, if you would have taken this and you ran it up here, that's a little bit of money, right? Let's say if you caught this retracement here, and then what you did was you got an order here, it retrace again, you got an order here, retrace again, you got an order here, and you got an order here, and now what you have is a nice setup all the way down here, versus you trying to force a trade for only this. You feel me? So that's what you need to, that's how you need to look at the charts. Is you want the actual most high probability setups, which mean clean entries and smooth run. So you want clean entries. You want entries to be clean at the beginning of the actual trend, the beginning of the expansion, the beginning of the retracement. You want it to be clean so you can catch the entire leg, instead of trying to catch the leg halfway or 3/4 into the actual trade. You don't want that problem. So yeah, so that's fear of missing out. You know, you're trying to get a piece of it, whatever. So all in all, what you have to understand is, or what you have to get into your mind is that this is all logical, it's all rational. There's no emotions that need to be involved when it comes to trading. You have to have rules set in place that allow you to build that discipline for you to get to a certain level, a certain level of consistency. Because if you're just willy-nilly all in this and you're just chaotic, what's going to happen is you're going to start getting chaotic results and blowing accounts left and right. You don't want to get chaotic, because like I tell people and I tell individuals in my actual group all the time, we are not governed by, while we're trading, we don't have supervisors, you know what I'm saying, looking over our shoulders, telling us when to take a break, telling us when to take a lunch. We don't have supervisors and managers telling us what to do, when to clock in, clock out. So this is all up to us. And by nature, humans are chaotic because the mind is chaotic. So if you don't have set rules and discipline, and you don't have that discipline in a disciplined frame, you know what I'm saying, what's going to happen is you're going to have a chaotic way of trading, a chaotic way of doing things. And when you start having a chaotic way of doing things, not being rule-based, not being logical, not being 1 + 1 = 2. Instead, you're like, I think 1 + 1 can equal 4, so I'm going to go for 4. You know what I'm saying? There's no logic in what you're doing. You're going by what you think and what you feel. And the universe, this world, the charts don't care about what you feel. None of that matters. Everything is logical. Everything is cause and effect. So if you start thinking in that terms, you have to always think in terms of you are the cause of whatever is going to be the effect. And you don't want to be at the effect end. So I just leave this with y'all. So apply rules to your trading strategy. Apply structure to it. Without structure, there's failure. There needs to be structure from the chaos. The chaos needs to be set in order for that order to bring about consistency, efficiency, and productivity. You know what I'm saying? There's no production without order. So there's no production without laws. So you have to apply laws, give yourself laws, and set laws for yourself, because there's no one out here who's going to do it for you. So you may have a good strategy, but it's the fact that your laws are trash, or you don't even have laws in place that won't allow your strategy to bring about the fruits that you are praying for, the fruits that you are consistently asking for. You know what I'm saying? So I'm going to just leave that with y'all. So like, comment, subscribe, please support. If you want to learn how to trade harmonics, I have a harmonics course. Link is in the description. If you want a one-on-one, set a one-on-one with me. One-on-ones are not free. So please, I'll work on your budget, but one-on-ones are not free. So just please don't try to, whatever. I basically govern, I run an entire group, right? So, time is everything, right? So, like I said, we can get you. Your mindset is what, just like we have people in the group going from 1K days, 1K a week to up to 50K. You know what I'm saying? To up to 50K, 75K, killing my Forex funds challenges. You know what I'm saying? So it's not about knowing a lot of information. It's about knowing the right stuff. It's about knowing the correct stuff and having a strategy to implement the correct stuff to bring about the most that you can out of it. You want to juice it. Get the most juice out of that fruit as you can, right? So if you want to link up with me, if you want to pick my brain, you can set up a one-on-one. I'll drop my email address in the description, and we'll see what we can set up. Besides that, you guys have a wonderful day and happy trading. Let's get it. The market just opened too. So let's get it, y'all.